I'm not saying it's going to go to $1 million a coin like Michael Saylor is saying from strategy, but I do believe that it could trade to half of the market capitalization of gold, which is sort of a 10x from here over the next decade. And Bitcoin's different. It's a property. And if you'd have to really do the homework on it to understand it. But it's a volatile property. And like all tech, you mentioned Amazon. Amazon went down. If you held it, 10,000 went to $14 million. But boy, you had to have a stomach for it because it went down 8 times 50%, one time down 85%. And Bitcoin has been tracking other tech where it is not yet fully adopted. There's heavy skepticism on it. And so every 4 years, you'll see a 50 to 70% dip in Bitcoin. And we're seeing that right now. We're halfway through the cycle. There's halving cycles of Bitcoin where the network is spitting out 450 coins a day right now. In about 2 years, Wilf, it'll go down to 225, and then 4 years later down to half of that. So when that happens, you have these technical disruptions and selling pressure. But you either see it and believe it, or you're a Bitcoin skeptic like many people are, praying for it to go to zero. But I think this is an asset that's here to stay. When I first looked at Bitcoin in 2017, there were probably 50 or so million wallets. There's probably 9 or 10 times that now. And if you look at our population, it's only 4 or 5% of the overall global population. But remember, in stable countries like the UK or the US, even though we have pockets of inflation and we are using inflation as a way to monetize our debt, which we can also discuss the problems of that, most of the world has defuncted sovereign currency. Most of the world is either in a dollarization situation in some of the Latin American countries or Africa, or they're shifting to things like Bitcoin. China doesn't like it. They've banned it. And yet 10% of the transactions and 10% of the Bitcoin mining is still happening in China. So it's here. I've done the homework. I'm a believer in it. I think I have it sized right in the portfolio where if we're right, and again, I'm not saying it's going to go to $1 million a coin like Michael Saylor is saying from strategy, but I do believe that it could trade to half of the market capitalization of gold, which is sort of a 10x from here over the next decade. And let me just say one last thing. I have a son who's 34, went to Stanford Business School, and I was with him on Father's Day this past Saturday. He's an astute investor. He bought this Pokemon card for $16.5 million. He's creating this sort of physical asset treasure company called Treasure Trove. And he said something to me about Bitcoin, which people should listen to. He's 34. Bitcoin is in the top 15 market capitalized assets. Last year it was in the top 8. It's dropped because of this, fall in Bitcoin. I just want you to think about the durability and the sturdiness of that. And I want you to think about a 34-year-old being 44 in 10 years or 54 in 20 years. That generation of men and women are going to own Bitcoin. It's the generation that I'm in, the 60 generation, that likes gold. And they have a disdain for Bitcoin. But the future is going to be digital, and the future is going to have a form of digital stored value or digital scarcity. And I'm a believer in that long term. For me, I got this wrong. This is a story of me missing things. Hal Finney is somebody that I met maybe 2011. He gave a presentation at the Ames Research Center, which is outside of Silicon Valley. It's sort of Google has a research thing there. Peter Diamandis was running something called Singularity University. Hal Finney came and gave a speech on Bitcoin. And if you remember, he was the first recipient of a Bitcoin from the Satoshi wallet. And some people think Hal was actually Satoshi. But I listened to it, didn't believe it. I think I put out on Twitter, don't understand Bitcoin, I don't care, caveat emptor. So I missed it. It was probably trading at $60 at the time. In 2014, the Winklevosses came to me at the Skybridge Salt event, which was in Las Vegas. They explained the prowess of Bitcoin. I think it was trading at 1,000, maybe 600, something like that. I passed on it as a traditional institutional investor. And then my brief, ill-fated tenure in the White House I can tell you, Wilf, it was a Wednesday. It happened on a Wednesday because I was only in the White House one Wednesday. So I know that it was actually a Wednesday. Two Fed officials came into the West Wing with Steven Mnuchin to talk about this digitization of the U.S. dollar. And they had done a white paper. And I looked at the two of them and I said, well, so over the blockchain? And they said, yes. And I said, like Bitcoin? And they said, yes. This is 9 years ago. And I remember thinking to myself, okay, I have to be neurally plastic. I have to understand this technology that I have refused. I've gotten 2 pitches at. I've swung and missed at both of them. These guys are believers in the blockchain. They work at the Fed. I got to understand the blockchain. I'm not saying I'm going to invest, but I got to understand the blockchain. And so, I think I got fired maybe 3 or 4 days later. I went back to Skybridge and I bought the URL skybridgebitcoin.com. And I started doing homework on Bitcoin specifically. I'm going to say the following things about Bitcoin. Number one, you have to do some homework on Bitcoin. If you're an investor, you can't just flip off Bitcoin. You have to do the homework. And I submit to people that do the homework, 9 out of 10 of them will probably own a little bit of Bitcoin. Paul Tudor Jones didn't like it, now owns it. Ray Dalio, Stan Druckenmiller. I could list Howard Marks. I could list a series of investors that after steeping themselves in understanding the technical nature of Bitcoin and what it actually is, they end up owning it. And so this is a hard asset. It's effectively a spreadsheet. It's an open, fully transparent spreadsheet where there's hundreds of thousands of nodes that are going to verify the transactions on this hardened spreadsheet. And when you look at the definition of money, and my friend Neil Ferguson wrote a best-selling book. It became a BBC documentary called The Ascent of Money. So if you read Neil's book, he defines all the characteristics over thousands of years that we relate to money. You know, the immutability, the special uniqueness, the scarcity, etc. And this has all of that. And it has one extra layer, and that is it has the absence of a third party. And so we don't like each other typically as human beings, and we don't trust each other. So we've always gotten our money from a third party. That would be our government. And we've always transacted with third-party verification. So if I'm going to buy your house, you wait for my funds to get transferred into your third-party corresponding bank before you hand me the deed. But over the blockchain, because of the nodal system and the confirmation process, we can have a peer-to-peer permissionless transfer. And so that is a great expedition. It's a huge cost savings. You go to my restaurant, if we have stable coins, which are US dollars represented on the blockchain, we can pay the bill at the restaurant by taking the stable coins out of my wallet and moving them to the restaurant's wallet. We eliminate that third party known as the credit card company. We'd save 3.5% of the fees. On a restaurant like mine that has 15% margins, a 3.5% fee is like a 30% uptake, 28% uptake in the gross margin. So you have trillions of dollars of expenses related to third-party verification of our transactions. And I guess if you go to ChatGPT or Claude, the estimate is about 4 trillion US dollars. This would be, think lawyer fees and transacting on deeds, credit card fees, wire fees, all the different things that we do. The blockchain can help us avoid those. They're very reminiscent to me of telecom, where when I was here in this city at the London School of Economics in 1985, it cost me $3.50 per minute to talk to my parents. Of course, I was able to call them once a week, let them know I wasn't drunk somewhere at, the Odeon or the Hippodrome or places like that. And now you can make that call costless anywhere in the world just by hooking up into an internet cafe. And so this technology has the ability to transform finance. We will have perpetuals. The CME is not happy about them, but we will have those. We just saw OKX do a deal with the New York Stock Exchange. We just saw Kraken do a deal with the NASDAQ. And so put simply, this is a technology that's going to enable us to bypass costs and make things secure and very efficient.
Hey, I am Maria with Daily Dose Crypto. Have you noticed that gold, silver, and Bitcoin have hit all-time highs recently? Is this a coincidence, or are smart investors onto something? The dollar is depreciating, inflation is eating up all of our cash, and the US national debt is through the roof, hitting new highs every day. That's why people are shifting to alternative assets like gold, silver, and Bitcoin. We at Daily Dose Crypto have partnered with iTrust Capital, your one-stop platform to buy and securely store 80+ digital assets, including Bitcoin, gold, and silver to hedge your future against debasement. With over 200,000 accounts, 15 billion in transactions, and 11,000 plus positive reviews, they're helping real investors build long-term wealth with their tax advantage, IRA, and PCA, which is a premium custody account that supports the highest level of custody and security in the space. They do this all with institutional-grade custody through partners like Fidelity Digital, Fireblocks, and Coinbase Prime, keeping your assets secure while you can trade 24/7. Fees are just 1% per transactions with no monthly or annual costs. Getting started is simple. Sign up for free and fund an IRA or PCA today. You'll receive a $100 bonus and start growing your assets the smart way. Click the link below to open your account now and begin your journey toward generational wealth.
Well, I've evolved a lot. I would say to you that if you'd asked me that question 20 years ago, I was, plugged into everything, all the stuff that you did on CNBC, and I was plugged into market sentiment and the ideas around the Federal Reserve. Of course, we lost Alan Greenspan this week. And if you remember, we used to look at his briefcase, and if he had a big briefcase, we thought he was raising rates, and if he had a small briefcase, we thought he wasn't. Of course, he said that that was Andrea Mitchell, his wife, giving him lunch that day. If he had lunch in the briefcase, then it didn't really have anything to do with the rates. So I was very fixated on short-term fluctuations, market sentiment, momentum. And then I would say over the years of being burnt and recognizing that I'm not smart enough to do that, the smarter thing to do would be to relax a little bit, be less tense about the markets, and then look at and either accept or reject the long-term trend. And so I'm sort of in the Buffett camp of accepting the long-term trend. I think where I differ from the greatest investor ever, Warren Buffett, is that I'm probably more open to technology. I'll tell this story because I think it was instructive and cost me a lot of money, this story. I was at the Sun Valley Conference. Allen and Company hosts a spectacular event. This is many years ago. It was probably the year 2000. And a young man at that time by the name of Jeff Bezos got to the microphone, and he was making a presentation. And I was sitting in the front row writing copious notes, and he was talking about Amazon. And at that time, it was priced as a overexpensive internet bookseller. And Mr. Bezos was explaining to the crowd that it really wasn't a bookseller. He was just using books to dot plot his warehouses, and they're easy and inexpensive to mail around. He could get a sense for where the demand was for consumers. And he was eventually going to sell everything, sort of this A to Z thing like you see in the brand. And so I thought, oh, this is an ingenious thing. And I was writing down these notes. I've got to go out and buy Amazon. But the next speaker was Warren Buffett. He got up to the microphone. He said, he's a very bright young man, Mr. Bezos, but, I wouldn't touch that with a 10-foot pole. And can you believe that this company, Amazon, this internet bookseller, has a valuation in excess of this storied retailer, Sears, which was, of course, Sears Roebuck. And look at all the assets that Sears has and all of its hard real estate. And, of course, I took my notes and ripped them up, and I threw them in the garbage. And if you had just put a $10,000 investment in that company that many years ago, it was worth north of $14 million today. To just give you a sense for missing things and the learning that's involved with missing things. So I'm sort of in a two-tiered approach now. I've got this very long-term view, upwardly biased on markets, and then I have a belief that we have to participate in these new technologies. And so I wasn't an early investor in SpaceX, but I was able to participate in the private rounds of SpaceX over the years. I've gotten into Anthropic and a few of these other things, which an earlier version of me I would have never participated in. Mm-hmm. And I'm telling you, of course, about the winners, but I could give you a phone book, Wilf, of my losers as well. I don't want to suggest that I'm, doing anything. I just think you're betting the averages. And so I don't look at the near-term stuff as much as I used to, and I'm not as focused on it. I think I would caution younger investors that listen to your show to try to think way longer term. I think these were mistakes that I made in the early part of my career that I wish haven't served me well. Too impetuous, too knee jerky, selling at bottoms and buying at tops, and doing all the classic mistakes that you'd expect from human nature. People have asked me about the AI bubble. Is there a bubble? What happens? I'm old enough to remember the March of 2000 Internet 1, sort of Web 1 collapse. The Dow got hit, but the Nasdaq really got crushed. It was down probably 70%, peak to trough. And could that happen? I'm not saying it couldn't happen. There's different things going on today relative. I think the Fed and the central banking community is more sensitized to that. I'm not saying they're putting a put in place, but they sort of are in some ways. They weren't doing that as much, in the Greenspan era as they're doing now. I would say that we're going to be wrong about some things short term, but I think the inflation that we're seeing right now is supply shock related. It's been inducted by a few things, President Trump's tariffs. It's been inducted by the war going on and the uncertainty about the Strait of Hormuz and the insurance costs of getting tankers now through the Strait, which has really hurt the supply, and it's also affecting prices around the world, because of course, the most important commodity has an impact on all the other prices.
For more Daily Dose Crypto News, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.